As we enter 2026, JPMorgan strategists express both optimism and caution. They see a favorable market environment thanks to economic boosts from the United States and China, and fewer policy headwinds. These conditions create fertile ground for growth, at least in the short term. Yet, JPMorgan remains wary. Uncertainties still loom. To hedge against risks, they're turning to small and mid-cap stocks. This dual strategy reflects JPMorgan's nuanced approach for 2026. To understand JPMorgan's shift, let's define SMid-cap stocks. SMid-cap stocks are companies with a market capitalization between small and mid-sized firms, typically from a few $100 million to several $1 billion. These businesses have outgrown the early stage but aren't yet large-cap giants. SMid-caps offer a blend of growth potential and stability, with more established models than small caps, but more room to grow than large caps. This balance makes them attractive for investors seeking both opportunity and resilience. Over recent years, large-cap stocks have been the darlings of the market. These are companies with a market capitalization typically exceeding $10 billion, including household names and industry leaders. Their appeal lies in their perceived stability and ability to weather economic fluctuations, often providing reliable returns. This has been particularly true during the recent bull market, where large-cap stocks have delivered impressive returns. The strength of large-cap stocks has been underpinned by a series of favorable economic conditions. These include low interest rates, robust consumer demand, and technological advancements that have benefited big tech companies. As a result, large-cap indices have consistently outperformed their smaller counterparts, capturing the lion's share of investor attention and capital. However, the dominance of large-cap stocks has not come without consequences. Their valuations have soared, leading to concerns about whether they can sustain such high levels of growth in the long term. As these stocks become increasingly expensive, their potential for future growth diminishes, prompting investors to explore other avenues for investment. In contrast to their larger counterparts, SMid-cap stocks have struggled to keep pace with the market's recent trajectory. Over the past 4 years, these stocks have significantly underperformed, making them an overlooked asset class. The disparity in performance has led to SMid-caps being undervalued, trading at historically wide discounts compared to large-cap stocks. This underperformance, while a setback for past investors, presents a tantalizing opportunity for those with a forward-looking perspective. JPMorgan views these stocks as mispriced, offering a unique combination of improving fundamentals and attractive valuations. The current market environment provides a rare chance to invest in SMid-caps at a time when they are positioned for potential recovery. The undervaluation of SMid-caps is particularly pronounced in developed markets outside of Japan. Here, the discounts are at or near their historical peaks, suggesting significant upside potential. As investor sentiment begins to shift, these stocks could see a reversal of fortunes, providing substantial returns for those willing to invest early in the cycle. A key factor driving JPMorgan's interest in SMid-caps is the improvement in their fundamentals. Over recent years, many SMid-cap companies have streamlined their operations, focused on core strengths, and enhanced their financial metrics. These companies have adopted innovative strategies and technologies, positioning themselves more competitively within their respective industries. This transformation is evident across various sectors, from technology to healthcare and beyond. SMid-cap companies are leveraging their agility to capitalize on emerging trends, such as renewable energy and digital transformation. Their ability to adapt quickly to changing market demands is a significant advantage, setting the stage for robust performance in the coming years. Moreover, these companies often have less exposure to international market fluctuations compared to large multinational corporations. This relative insulation can be beneficial in times of global uncertainty, making SMid-caps a potentially safer harbor for investors seeking stability amid volatility. Investor sentiment towards SMid-cap stocks is beginning to show signs of change. After years of outflows and relative underperformance, the tide is turning as more investors recognize the potential value these stocks offer. The shift in sentiment is driven by a growing awareness of the attractive valuations and improving fundamentals of SMid-cap stocks. As large-cap valuations continue to rise, investors are increasingly drawn to the potential upside that SMid-caps present. This is particularly true for those seeking active stock selection opportunities, where careful analysis and strategic investments can yield significant rewards. The contrarian approach of investing in undervalued SMid-caps aligns with the broader trend of diversifying portfolios to manage risk and maximize returns. The growing interest in SMid-caps is also supported by changing macroeconomic conditions. With interest rates poised to remain relatively low and economic growth prospects improving, investors are more willing to take calculated risks on promising SMid-cap companies. This renewed interest is likely to fuel increased capital inflows, further boosting the potential for these stocks to outperform in the coming years. JPMorgan's strategy with SMid-caps is twofold: capturing opportunity while managing risk. By focusing on these stocks, the firm aims to capitalize on their undervaluation and potential for growth. This approach is not merely opportunistic, but also serves as a hedge against potential downturns in the broader market. The strategy is described as both contrarian and tactical. While the mainstream market continues to favor large-cap stocks, JPMorgan's focus on SMid-caps positions it to benefit from the eventual rebalancing of investor preferences. This contrarian stance is informed by a comprehensive analysis of market dynamics, including historical performance trends and current valuations. By investing in SMid-caps, JPMorgan is also preparing for a scenario where the current blue sky outlook might give way to less favorable conditions. The firm's approach ensures that it remains resilient in the face of potential market turbulence, maintaining a balance between risk and reward. For investors, the shift towards SMid-cap stocks presents both opportunities and challenges. On one hand, the undervaluation and improving fundamentals of these stocks offer a chance to achieve significant returns. On the other hand, navigating the complexities of the SMid-cap market requires diligence and strategic foresight. Investors should pay close attention to market indicators that signal changes in economic conditions and investor sentiment. Monitoring interest rates, geopolitical developments, and sector-specific trends can provide valuable insights into the timing and selection of SMid-cap investments. Additionally, understanding the specific strengths and weaknesses of individual companies within this segment is crucial for making informed decisions. Engaging with financial advisors and leveraging analytical tools can further enhance investment strategies. By staying informed and proactive, investors can effectively manage the risks associated with SMid-cap stocks while maximizing their potential benefits. In conclusion, JPMorgan's focus on SMid-cap stocks reflects a strategic response to the current market landscape. While large-cap stocks have dominated in recent years, the undervaluation and potential of SMid-caps offer a compelling alternative for 2026. This shift is driven by improving fundamentals, changing investor sentiment, and the need for diversification in an uncertain economic environment. For investors, the path forward involves balancing optimism with caution. By embracing a nuanced approach to SMid-cap investments, they can position themselves to benefit from both the opportunities and challenges that lie ahead. In this dynamic landscape, staying informed, adaptable, and strategic will be key to navigating the complexities of the market and achieving investment success. Ultimately, the journey into SMid-caps is not just about financial gains. It's about aligning investment strategies with the evolving market dynamics and being prepared for whatever the future may hold.